Okay, today is an inside day bar, which means it did break over yesterday's previous level high, so it went to higher than that, but then it just came right back down in a massive drop, and it's inside the range of the day and the candle from previous day. So we're looking for longs at the low, and I want to show you one of my favorite setups. I even use my real money accounts, which I rarely do, only once a month when I find I'm pressured to do that, or they'll charge me for inactivity fee on the real money accounts. I got three of them copy pasted together. They're small accounts, but I found something that looked. I wait and wait for A plus setups, in my opinion, and I want to show you this one A plus setup. And first, we got to let's just look at the day, because you'll see what I mean by the day. You can see the kind of day it is. It went over yesterday's high just for a second and come crashing down. Here's yesterday's low, which it could easily violate and still come back up into this area for a pretty much flat doji kind of day. That's what I'm expecting. Even if it breaks yesterday's low, I'm not anticipating it to continue down in a very strong sell-off candle. It could do that, but so we're looking to trade the range and be aware of a possible sell-off. So when price comes down, let's take a look at the 60-minute. I want to see what I didn't look at the 60-minute, but I'm looking at it now just to see what I would have been thinking. And I would have been thinking the same thing. This is a range. It's just coming back into the range. There's no reason to think it's going to keep going down through that. Probably will bounce somewhere. So it just really spiked really hard right over here. And it swept past that, and it swept past that, and it was pulling down into what I would consider support and the low end of the range. Here's the 10,000 tick chart. Here's yesterday's low. If it goes down here and keeps selling, that'd be a massive sell-off. But yesterday's low is way down here. I don't think it's going to go down that far, right? It came down into this area, and I went. Now, the reason why I went with my real money, though, because that could have kept going. I was watching the candle behavior here on the 10,000. That was the 10,000 tick chart, top left. Bottom left is 2,000 tick chart. And when this hammer was produced, this hammer right here, and I saw that it had broken that level, I said, if this goes back up, I will use that pivot point as my stop loss. So I got in long here. This is my stop loss. It's like 20 bucks or something. I don't know. I don't really know how much that was, but I got out higher up. It kept going, and I got out, and I could have gotten out for a lot more. The problem, I got out for just a tiny bit. When it was a guarantee that, hey, this is going to be profitable, you have to take your trade for the month. You don't want to get charged an inactivity fee. This looks like a perfect setup. What I like about perfect setups is that you don't buy on the breakout. You wait for the tail to be created and start heading back up. And you're kind of judge wherever that tail might end. Whatever it's going up against on this side over here, if it penetrates it and goes back up, you can use that tail as the liquidity sweep potential bottom for at least something to go up, or you have a very small stop loss if it does not work out, which I like. And see, it's already coming back. But yeah, I didn't make very much on that. But when you copy paste three accounts together, $20 is $60. And today it was only like $8. So it was like $24 I made on that. And then it's just so I don't get charged the inactivity fee. The goal is to trade my real money accounts eventually, or pass more of these Apex accounts, which I passed two. I haven't been trading them yet because I paid $140 for them. And I want to make sure when I trade it, it's like real money, because at this point, you're investing a lot, it seems, for these accounts. And, I want to go ahead and pass at least 5. 3 more would be good. And then I might not even try to get 20 accounts. I'm not sure. We'll see. I need to start treating the real money aspect of my mind and start trading for real money instead of this, these evaluation accounts, which are good. But at some point, we got to get out of the evaluation, start using real money. Or maybe trading is just not for somebody who cannot pass some accounts and take risk management and know where your stop loss is and get out when you're supposed to, and that kind of thing is what I'm learning, and that's why I used my real account today, and that's what I was looking for. I was looking for that pintail to come back down and go back up after it swept that hammer, and it's because it was a hammer, gave me more confidence. Here's another hammer over here, and guess what? It did sweep that level right there, and that would have been another chance to do the same thing there. And I don't know if you understand what I'm saying, but when this pintail came down below the previous low and went right back up, that's the time to buy. When it's going back up, right as soon as it starts to sweep up higher, go back up, and then you use the current candle as your stop loss. It's very tight stop loss. Anyway, we'll see you on the next video. Hope everything works out well in your life. Peace.